Well, I really understand, but should we just have a conversation about Chase EIN only, business line of credit? Welcome back, folks, to another edition of the Awesome 30 Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka, and let's roll. In today's conversation, I want to talk to you about Chase's, if you will, EIN only, $5 million business line of credit. It's very important that when we talk about business line of credit with Chase, you have two types of lines of credit. You have a small business line of credit, what we call here line of credit 1, and then you have a commercial line of credit, what we call in this show line of credit number 2. Let's first talk about line of credit number 1, the small business line of credit. This is kind of cool if your business currently needs easy access to cash for short-term capital, inventory purchase, supplier payment, or an emergency fund. So right off the bat, I would just want to tell you, if you have a relationship with Chase right now and you are contemplating their business line of credit, it has to be short term. It has to focus on the short term aspect of your balance sheet. It must be about inventory. It must be about accounts receivable. It must be about accounts payable, right? On the obligation side of the balance sheet. It's important to understand that when you think about business line of credit, you have to think about short term. You have to think about current assets, current liabilities. And in terms of the line amount, you are looking at $10,000 to $500,000. Okay, this is the line of credit, and the annual fee is automatically waived when your average line utilization is 40% or more. And the line is renewable 5 years. So there is a renewable 5-year revolving term. One thing I need to say is that money. Why did I mention 5 million? Well, guess what? If you have the kind of relationship that you need to have with Chase, they can bump you up. They can bump up your credit line all the way to 5 million. Okay. And the cool thing is you pay interest only on the amount of credit that you actually use. You can choose a monthly payment date that suits your cash flow. The monthly minimum payment is accrued interest plus 1% of the outstanding balance, or $100, whichever is greater. And at the end of the 5-year revolving term, no further advances are available, and the outstanding principal balance is repaid over 5 years unless renewed. And the interest rate is based on such factors as your banking relationship, aka MPR. Hello, did you hear that? Also your credit history, as well as the collateral in case you are looking for a secured line of credit. I want to talk to you now about line of credit number 2. So line of credit number 1, that's for a small business line of credit. Line of credit number 2, that's what Chase called a commercial line of credit. Okay, this is actually great if your business has larger working capital needs. I want you to understand here, if you're making more money, okay, that's as simple as that. If your business is making more money, if you're making more than $1 million a year, and that's a gross revenue, you can actually contemplate this line of credit. Okay, here the line of credit is more than $500,000. There is no limit, so they can go all the way to 5 million or 10 million. It really depends again on the strength of your financials, but also on the strength of the banking relationship that you have established with Chase. And in terms of interest rate, the interest rate here is tied to LIBOR. Okay, initial terms from 12 to 24 months and renewable thereafter. This makes sense because you can see here that the term is limited to 2 years as opposed to the 5 years that they were giving you for the business line of credit. And this makes sense because the higher the amount, Chase does not want to expose itself over a longer period of time. So if you're talking about 5 million or $10 million, nobody wants to be stuck in a promissory note in a relationship over 5 years. Nobody knows. Things happen, right? And with this commercial line of credit, you have interest only monthly payments. This is kind of cool. You have online access to for payments and to request in advance. And what we love with Chase when it comes to the commercial line of credit is that they will assign to you a banking, let's just say a loan rep or a line of credit rep or an account manager. You can ask all questions that you want. You can ask for increases. You can ask for this person will be the go-to person on your account. And the interest rates on this commercial line of credit is based on factors as diverse as your banking relationship, your credit history, and the collateral. I just want to say a quick thing about collateral. When they talk about collateral, they were talking about all the assets that are on your balance sheet. Okay, this could be everything from your current assets, inventory. It can be your accounts receivable. It could be anything else, but also your long-term assets. It could be anything anything in your property, plant, and equipment on your balance sheet. It could be machinery, it can be equipment. Obviously, when we talk about a commercial line of credit, just make sure that those collateral, those assets are easily monetizable. In other words, they are liquid. Let's talk about other business funding. So obviously in today's conversation, I wanted to talk to you about line of credit, but we were just so excited when we were doing the research that we found other loans, other business programs that you might find interesting. If you are in the market, if you currently have a relationship with Chase and you just want to contemplate whatever they have available now, you might be interested in their commercial real estate loan. We love that. The APR is kind of low. This is really good. And for example, you have a real estate lending for purchasing, building, or refinancing. This is kind of cool. You have loans that start at $50,000 and you have an LTV that goes all the way to 80%. If you were to ask us, 80% LTV, loan to value, is kind of cool for most owner-occupied commercial real estate, especially coming from a big national bank such as Chase. Okay, and you have construction loans available with interest only payments during construction period, followed by a fully amortized term out period. You have conventional or SBA financing. This is kind of cool also. And you have select financing that best fits your needs, from fixed or variable rates with adjustable terms, including 7 or 10 years. This is really good. And in addition to CRE loans, you own commercial real estate. That's what CRE stands for. You also have business loans. Okay, so business loans here, those are your traditional term loans. You have the term loans, you have the draw loans, you also have the advised line. In other words, you have this is a funding program whereby you have a pre-approved period allowing you to make purchases for up to 12 months. Okay, so you're basically locking in rates and terms at the time each purchase is made. Okay, and here the loan amount starts at $10,000 and you have terms that go all the way to 7 years. This is kind of cool. And Chase is also a big player when it comes to SBA solutions. Okay, they have SBA loans, particularly the two loans that you might be interested in. You have the SBA 7A loan program and the SBA 504 loan program. Okay, one thing you just need to know very quickly is that when we talk about SBA 7A loan program, you have loan amounts that go all the way to $5 million, and you can use the money for acquiring a business, purchasing real estate or equipment, working capital to help manage cash flows, or even business expansion. And the SBA 504 loan program can be used for purchase of real estate, construction equipment acquisition, and refinancing of debt, and the maximum loan amount $12.5 million. I want to talk to you now about eligibility, folks. We are still having a conversation here about Chase's EIN only $5 million business line of credit, in some cases even $10 million. Let's talk about the eligibility, okay? I have spoken to you about the relationship you need to have. This is true, but you got to have a business history, an operational history, minimum 2 years. So that means what? It means that if you have a startup, don't even think about Chase right now, unless again you have a strong relationship, but you're going to have to do a lot of talking here. Okay, so your company must be in business for at least 2 years. Your business PDEX score must be 75, at least 75. When we talk about business PDEX score, we are speaking about Dun and Bradstreet. If you don't have that, you better start now. If your business is at least 2 years old, but you don't have a business PDEX score, I want you right now to write it down, and you have to go to Dun and Bradstreet website, and you want to register for an account so that they can start tracking you. They can start tracking your business rather. Okay. And in some cases, there might be some personal guarantee required for owners holding 51%, at least 51%, if you have large amounts. In other words, if the line of credit is going to to 5 million or 10 million, Chase will want to cover their ass too. It's all about risk mitigation. It's all about default risk mitigation. So they might ask for some PG from owners who hold 51% at least of the business. In other words, owners who control the business. Okay. And one thing that's very important is that they want to make sure that you, in terms of revenue, you make at least, not you, but your business makes at least $250,000 annually. We are speaking here about gross income, folks. We are speaking about the fact that your business must make at least, I would say 250 divided by 12, that's what? 20 grand, 21 grand. Okay. That's gross income. And obviously it's important to mention that, and this is something you want to think about, and this is a big decision time for you. You need to have an MPR with Chase. You need to have an MPR with Chase, a multi-product relationship with Chase. And I'm not talking about just all kinds of accounts. I'm speaking about having asset accounts, checking accounts, business checking, business savings, business retirement planning, business IRA, business CDs. This is the kind of accounts that will count when it comes to your MPR. This is really important. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We're actually having a conversation today about Chase's EIN only, $5 million business line of credit. This is unsecured, of course, and I want to talk to you about the paperwork that is needed to get this line of credit. Okay, whether you decide to go for the commercial line of credit or the small business line of credit, there are some requirements that you need to pay attention to when we talk about the paperwork. First, you need to have your business tax returns available. Okay, and this could be your 1065, it could be your 1120S, your 1120C, depending on how your business is structured. If you have a sole proprietorship, you can also, you might want to have the Schedule C of your 1040. One thing for sure, chances are very slim that you will get this business line of credit if you are a sole proprietorship. If Chase doesn't see a clear distinction, a clear divorce between your business's affairs and your personal affairs, they are going to they're not going to approve you unless, again, you have a strong balance sheet, like you are really making a lot of cash and they really value your relationship with them, so they will just okay all kinds of loans that you apply for, or that you so besides the business tax returns, you want to think about financial statements, and if possible, those financial statements must be audited. Obviously, if you're looking for a large amount, you might want to provide some kind of assurance to Chase that, hey, listen, those numbers are accurate, in which case you might want to hire a local CPA, a local auditor, to go through your financials and ascertain the validity, the accuracy of the underlying data. Chase might want to see a business plan from you. Just kind of have confidence that this is a solid business, that there is vision behind it. There is a mission statement. You have a plan. Okay, business plan. The business plan is very important. They might want to see also business licenses and permits. They might also want to see resumes and bios of founders. Okay, anything that can provide a context of confidence, a context of trust, a context of reliability. You want to do that. So that's what those documents provide. They provide the reliability, the trust, the confidence that Chase needs to extend to you a large business line of credit, business tax return, financial statements, business plan, business licenses and permits, resumes and bios of founders. And don't forget, for the financial statements, if you have to do assumptions, you have to include assumptions, not a problem. Let's talk about financial liquidity, folks. We are still having a conversation about Chase's EIN only. $5 million business line of credit, right? So we want to talk about, this is one important element that Chase pays attention to, and that's financial liquidity. Boom, I just dropped it. Financial liquidity. Yes. It's important to understand that your business's financial liquidity refers to how easily assets can be converted into cash. What I'm trying to say here is that, remember earlier I was just talking to you about Chase requiring some PG, some personal guarantee from folks who hold 51% of your business. Well, Chase wants to make sure that the assets that you are pledging are convertible into cash. I use the word monetizable, but that's what we call financial liquidity. That's what it is. You just want to make sure that the assets that you have are easily convertible. They are liquid. Okay, it's very important. So one thing you need to understand is that, for example, some assets are more liquid than others. If you have inventory that is easily sellable, if you have accounts receivable from reputable businesses, if you have machinery that people use a lot in your industry, those are basically liquid. But if you have some kind of some kind of exotic machinery that hasn't been used for the last 20 years or 30 years that deserves a place at a museum more than at a place in your warehouse, this could be very hard to sell, right? So when you think about financial liquidity for your business, I want you to think about money. And how is Chase going to ascertain your financial liquidity, your business's financial liquidity? Chase is going to pay attention to three things. And all these three things are taken from your statement of cash flows, and in some cases, your statement of income, your P&L, okay? Chase is going to pay attention to your current ratio. This is also known as working capital ratio. This measures the liquidity of your business and is calculated by dividing your business's current assets by its current liabilities. That's the current ratio. And then we also have the quick ratio. So Chase will pay attention to your asset test ratio. That's another name for quick ratio. And this basically is identical to the current ratio, except that the ratio excludes inventory. So inventory is removed because it is the most difficult to convert to cash when compared to the other current assets like cash, short-term investments, and accounts receivable. And then Chase might also look at your operating cash flow ratio, which basically measures how well current liabilities are covered by the cash flow that comes from your business operations. Okay, one thing I want to say is that when we talk about current liabilities, we mean short-term liabilities. Let me finally close today's conversation by talking to you about Chase's MPR. You've heard this word, you've heard this acronym several times. This is a term that we use in our internal analysis here. We've been using this term for 10 years. And it was kind of funny that we started hearing people use the same term online and that they just missing the point. The MPR simply means multi-product relationship. And it means that you need to have accounts with the bank, but also services. Okay, it's not just about having checking accounts or savings accounts. Obviously, in Chase's, in this case, you might want to have business checking accounts. You might want to have business savings accounts. You might want to consider Chase for their business services because they do offer business services. And if those are in line with your operations, you might want to hire Chase for that. So when we talk about business services, we are speaking about a constellation of services. For example, merchant services. Here is where you are able to offer your customers a variety of secure and convenient payment processing solutions. They can securely accept payment at the counter or the go or online, on the go or online. Okay, you are making it more convenient for your customers to pay you and improve your cash flow at the same time with next business day funding. Chase offers the kind of service. Big decision time. Big decision time. Are you in the market for collections services? Because Chase offers that too. You can simplify the managing. You can simply manage your business with services that help you increase cash flows. So they have receivables online. So they have the economy lockbox, receivable online, the wholesale lockbox, cash services. So if your business deposits less than $10,000 a day, Business Deposits Express is a great solution. Okay, they have cash vault services. You have the Chase Quick Deposit, so you can actually deposit checks right from your office or phone. You can send or receive payments with Zelle. Okay, you can save time and help your cash flow. You can get paid or send payments quickly without cash or checks. You also have additional business banking services. For example, you have ACH payment services. You have an Access and Security Manager, where you can actually delegate how employees can manage your online accounts, pay vendors, or process payroll. All right, folks, this is it for today's conversation. I was actually talking to you about Chase's EIN only $5 million business line of credit. We spoke about the two types of line of credits that Chase has: small business line of credit, commercial line of credit. We spoke about other business funding programs for Chase, the eligibility requirements, the paperwork needed, the financial liquidity ratios you need to pay attention to, and last but not the least, the MPR you need to pay attention to when considering Chase for your EIN only business line of credit. I'll talk to you another time, but until then, remember, remain marvelous. Thank you so much.